RVMD at 102.71 with that insane 28.63% pop is not a stop. It is a launch event. And welcome to Dayrade Daily, where we turn this madness into intraday plans before it turns your account into modern art. So smash like and subscribe, or RVMD claims your risk budget in the first hour.
RVMD feels illegal. That 28.63% candle looks like my heart monitor after 3 energy drinks. This is pure gap and go boss fight, not grandma swing vibes.
Relax, Turbo Squirrel. RVMD is ripping. Because trial chatter plus biotech squeeze means every fund manager suddenly discovered fear of missing out. For day traders, this is classic exhaustion risk if you chase 4 candles late.
Structurally, RVMD is a gap with unusual volume and headline catalysts. Intraday, I would treat it as opening drive, then watch for a first real pullback to volume-weighted zones, not heroic top or bottom grabs while your hands shake.
My people, this is why we are here on Thursday, January 8th, 2026. Overall tape running at average. Intraday volatility near 6.23%. Market is a trampoline. And Dayrade Daily is your chaos translator for RVMD, UMC, INTC, and friends.
Speaking of trampoline, UMC at 8.93, up 9.98% is bouncing like my rent check. Every tick is a mini heart attack. This is textbook semiconductor gap momentum for quick scalps, not relationship goals.
UMC is not your rent plan. It is a foundry name. Catching love because chip demand chatter and sector rotation finally aligned. Treat it like a gap and hold candidate, but only if it respects opening range and you respect your stop.
Exactly. My cult semiconductor sermon, my people, on UMC. I want opening range breakout or nothing. If it reclaims that level with real volume, I am blessing that trade. But chasing the 5th green candle is how you tithe your account to the market gods.
Also, spreads on UMC can still sting early. If your first fill feels like a betrayal, that is your size and slippage tolerance misaligned. Small size on parabolic gaps is not cowardice. It is risk math.
Translation: if the candle jump makes your chairs live, you went way too large. Tiny size keeps your heartbeat under federal investigation levels.
DOCU at 69.57, up 6.72%, is the revenge of boring paperwork. Contracts are suddenly spicy because guidance did not implode, and digital workflow is back in fashion.
Imagine explaining to your friends that your best trade today was legally binding signatures. DOCU gapped because renewal metrics surprised, and growth funds hate being left out. Intraday, this is trend-friendly but nasty on fake breakouts near prior highs.
I actually like DOCU for a reclaim setup. Wait for it to peak over opening range, then fail. Then if it retakes that level with cleaner tape and higher volume, you have a defined risk bounce instead of blind chasing.
See, this is where Orin sounds like a calm robot. But he is right. Doku fake breaks will nuke you if you hit buy the exact second your brain yells, now.
Speaking of nukes, INTC at 42.63, up 6.47%, is granddad sprinting the marathon again and somehow not tripping. That is earnings plus data center narrative plus buyback whispers all in one bowl.
Intel is just reminding people it still exists. Guidance stabilized, and suddenly every long-only desk remembered this thing prints cash. For us it is clean opening drive. Then stalk the first pullback that holds above volume-weighted levels.
My only problem with INTC is my fingers. I see 6.47% and my brain wants full send. Then Grizz's voice in my head whispers, Remember the dot-com pain.
If my voice is in your head, that is your first red flag. But yes, kids, do not mark it by the 10th extension bar on INTC, unless you enjoy speed running from trader to cautionary tale.
Quick tip framed as trauma prevention. If a gap, like INTC or UMC, has already moved more than, say, 8.00%, and you missed the initial entry, your job is to wait for structure, not invent revenge trades.
There it is, Professor Pain Management. Like Orin said, if you miss the bus, do not chase the taillights. My people, wait for the stop, not the siren.
Can we talk CRDO at 141 up 6.05%? That chart looks like somebody turned latency into a weapon. Every micro dip gets punched instantly.
CRDO is the cool kid in high-speed connectivity today. Guidance beat. Some analyst got excited about bandwidth and suddenly everyone is front-running each other. Intraday that is perfect for pullback buys to prior breakpoints, not mid-air tackles.
Exactly on credo. I want the first higher low that does not feel like a crime to buy. You let early chasers donate. Then you walk in like the disciplined villain.
Meanwhile, EXEL at 46.19, up 5.75%, is the quiet healthcare grinder, less social media noise, which actually makes it nicer for structured intraday trend following instead of chaos scalping.
You just pitched EXEL like a yoga class. Slow breathing, steady candles, no Reddit explosions, just mindful stops and gentle partials.
Honestly, a yoga stop might save half of chat. Tape is volatile. Overall sentiment screaming speculative, and you degenerates are trading like every candle is your last meal.
Speaking of degens, CELH at 51.34, up 5.44%, is literally caffeinated consumer defense, earnings relief, plus influencers chugging it non-stop. Intraday, that is. Emotional, but lethal if you short. Strength on a green tape.
CELH is my spirit animal. I'm also my doctor warning, gap and grind pattern all morning. Easiest play is buy the pullback. That does not make your stomach flip. And bail if it loses last higher low.
KLAR at 31.24, up 5.04%, is another stealth mover. Fintech sentiment turned after stable guidance. I like it for volume-weighted tests and reclaim plays, especially when RVMD and UMC steal all the spotlight.
KLAR is that middle child stock? My people, quietly printing 5.04%, while everyone screams about biotech moonshots. So, quick reminder, hit like and subscribe before Orin runs a discounted cash flow on your dating life.
I would actually watch that episode. Orin explaining risk premia on ghosting. Meanwhile, Noke at 6.79, up 4.95%, is trying to remind people it still makes networks, not just nostalgia.
Nokia moves when carriers hint at spending pickups and macro fear cools. For day traders, NOK is more grind than blast. Think partial ads on higher lows and avoid oversizing, because liquidity can vanish mid-pullback.
MP at 62.50, up 4.48%, is my favorite rare earth soap opera. It moves when people remember supply chains exist, then forget 10 minutes later.
MP is mood swing materials. Intraday it is perfect for fade the third emotional spike strategy, but only if volume actually dries out. Otherwise you are just standing in front of a bulldozer.
B at 108, up 4.8%, is industrial cosplay for growth traders. Fuel cell narrative plus policy chatter every few months. Today it is Clean gap with room. So treat it like a momentum swing intraday, not a forever marriage.
Okay, lightning round time. RVMD prediction first. If this thing closes near highs, tomorrow every cousin on social media is suddenly a biotech expert with hand-drawn charts.
My bold call UMC becomes a personality quiz. If you chase the first 9.98% gap, your result is impatient liquidity provider. If you waited, you unlocked functioning risk management.
I will go nerdy DOCU and CRDO edition. I predict at least one of them becomes the unofficial meme for efficient markets, which is hilarious because social sentiment will be anything except efficient.
My prophecy, INTC, holds this 6.47% glow up, and we get think pieces about a silicon comeback, while NOK quietly steals the intraday trend crown, and CELH becomes the official beverage of bad risk decisions.
Final send, my people. If average intraday volatility stays near 6.23% tomorrow, RVMD, UMC, and MP will either mint legends or new therapy clients. So like and subscribe, so at least the entertainment value is positive, even if your P&L taps out.